Hey, welcome everybody to this Boom Effect podcast. Today I have another special guest for you guys, and this is a topic that is dear to my heart. And the reason being is because when I started my real estate journey, I wish I had this information. It would have saved me so much time in order to get my first property the fastest way possible, guys. So today we're talking about credit. All right, guys. So you guys already know in this podcast, what we do is we bring guests that are absolutely bold and obsessed in any field that they do, but also that are willing to share the information and not hold anything back. So obviously they have to have that optimistic mindset in order to be able to do that. And also they have a mindset that's abundant. And today, Abu, my guest today, absolutely represent the boom mindset. So we're gonna talk to him today about all things credit, guys. He's gonna drop all the gems here that you need in order to access financing to invest in your real estate dreams or any other type of businesses. So I'm gonna get him on here. Mr. Abu, what's up, bro?
What's up, Mamadou? Appreciate you for having me, brother.
How you feeling?
Man, I'm feeling great, man. Great to be on the podcast as well. And just like you said, man, credit is definitely something important. And I appreciate you for having me as well.
Fantastic, bro. No, I appreciate you for taking the time and coming on,
Mhm.
bro. We're gonna kick it off. Listen, this credit stuff. Just to give you a background, I grew up in
Mhm.
Europe. I've never heard of this concept. So coming to the U.S. when I came here, when my family talked about it, I'm like, what the hell is credit? Because in Europe, if in order, like Belgium
Mhm.
specifically, in order to access funding, all you have to do, if you had like a full time job, working about a year, you access to like small funding. So a lot of my audience are immigrants also, and they don't even understand the concept. Like, what does it even mean when you say credit?
Mhm.
Talk to me like I don't know nothing. What are we even talking about?
Yeah, absolutely. So that's a great point. And so I also come from immigrant background. So like my parents, they came from Sudan. And so
Mm,
as you're familiar, when you come to a new country such as America, you don't understand like the lay of the land, right? And so with America is actually one of the only countries in the world that actually has a credit system as big as the US, right? And so all credit simply is trust. As long as you have a social security number, it's basically the bank will go ahead and trust that you actually can be able to get funding and also be able to get access to capital. And so how it works, right, is that basically whenever you first come here, you'll get your visa, your social security card. And once you actually do that, you're able to go and apply for funding. And that way, it's almost like your, how do I say this? I would say as far as your report card for an adult, right? So it's going to show your financial stability and also your report card for as an adult. So that's simply put.
Okay, so simply put, is them seeing that we can trust this person if we give him the money. He has a history of paying his debt back,
Correct.
correct?
Exactly.
Okay, it's almost
Exactly.
okay. It's almost like if you come from a third world country, you should be able to understand this concept because back home the banking system is not that developed, so you have to go around and ask an uncle or a cousin or whatever. But they typically go around the block and ask about you before they give you money. So it's kind of that
Mhm.
what that looks like. But I think most immigrants also Abu don't understand what is meant to be used for, right? I know at least my where I'm originally from is West Africa, Guinea, right? And people that are from Guinea, they're a little bit more reluctant because they see as something bad. Debt is bad. If I take this now, I'm in financial trouble. What am I going to do with this? So like the credit here in the US, explain to the average person what is it normally meant to do for you. The average person maybe that is, wanting to just because here in the US you can't even rent an apartment without credit,
Yeah.
right?
Yeah. Not at
So
all.
but outside of that, a lot of people come here, they have the dream of financial freedom. So
Mhm.
people don't understand that this is meant to help you, access obviously funding in order maybe to start a business, whatever the case may be. Can you touch on a little bit of that? Why do people are so afraid of it?
Yeah, absolutely. And I think that's a great point as well, too, just because of the fact that we come from Africa, so we come from a different world, a different, also like a different financial system, right? So it's almost like it's looked down upon in Africa or other countries where you have debt. It's almost like it's like frowned upon, where if you're in debt, it's not a good thing because that means you have overextended yourself. However, when
Mm.
you come to America, it's a completely different ballgame because they honestly use credit in order to be able to manage like they use credit in order to be able to figure out how well of a borrower you are. So with credit, all the way, we're really in America. How credit started, right, is through the Diners card, right? So they actually had a Diners card where they wanted to be able to figure out every time a merchant would go to a different store, they wanted to be able to keep track of it, and that's what they would call it credit. And so this slowly
Mm,
started extending to different like insurance in different sectors as well. So then they started adopting that. So they started to realize, insurance started to realize, okay, if we have somebody who is in a low socioeconomic background, he's most likely going to go into default. If somebody has a high socioeconomic background, he's most likely going to basically be a better borrower. So they started to be able to use it in a lot of different sectors in order to be able
mm,
to go ahead and classify and categorize people. And so with credit and being in here in America, it's gonna anything you do in America is gonna revolve around credit, right? Whether you buy an
mhm.
apartment, whether you're buying a car, whether you even buying a house, right? Because a lot of times people don't even like a lot of times we have like some of my friends, right, when they're 18, 19 years old, they didn't even necessarily know anything about credit until they started getting denied for apartments and realized how important it is.
Yes.
So credit is nothing to be looked down upon. It's more how I look at credit is leverage. And just like you said, just trust and also leverage as well.
Yeah, and that's huge, the leverage part, right? Because I mean,
Mhm.
if you come here, one of the fundamental keys. I don't care if you want to open a restaurant, beauty salon, you want to do real estate. You can't do
Yeah.
these things without funding. That's just period. Now, 99.9% of us, when we come here, we don't have like a rich uncle to go, hey, here's $1 million. Let me fund your business. And most businesses don't take off the ground because of lack of funding. And so for me recently,
Mhm.
going through my real estate journey, it took me like 8 months to find my first property. And I did it the
Mhm.
absolute hard way. Found a motivated seller, negotiated under contract, turned the seller into the bank because I didn't know all I had to do is go have a credit profile, right? And we're going to touch
Mhm.
on that. If somebody has absolute zero credit profile, I want to know how to go ahead and get that. And then I could have access
Cool.
funding way sooner. And at that point now, I can go look for the property after I already have access to business funding. So
Mhm.
it's the leverage. The key is leverage, right? So talk to me about that, right? So if I'm starting right now, because a lot of my audience obviously they're interested in real estate,
Yeah.
and I have absolute zero
Sure.
credit profile at all, like at all, because I was maybe reluctant,
Mhm.
I don't know what to do with it. How do you go from zero
Yeah.
to like whatever? What is a good credit profile, credit score?
Yeah, so anything above 720 is going to be a prime borrower, so that's when you get the best rates. People say
Okay,
they have to
seven
have an
twenty.
850, but 720 is
So,
great.
okay, 720. So how do you go from zero
Mhm.
to 720? What does that process look like?
Absolutely. So as far as like anybody in the audience, right? Like what I would really recommend is like I always tell my clients, so I would tell anybody who's like looking to search for anything as far as credit or just in general my family member, I always tell them focus on
Mhm.
the credit report, not the credit score. Because if you can honestly be able to control the credit report, then you can be able to
Mhm.
control the score. Because the score is basically just it's more of like a how do I say this? It's more of a vanity metric, right? So let's say you have a 750 credit score and I have a 760 credit score. And it's more about me showing that I have a higher credit score. But credit score does not necessarily matter because if I go to the dealership and I get denied with a higher credit score and you get approved with a lower credit score, it's something that has to do with the credit report. So basically, I like to
Mm.
put it like this. Like I have my little brother, he was 19 years old, right? So he had a 750 credit score, like perfect credit score. He had a couple of student loans. But if you walked in a dealership, he wouldn't be able to get approved because he doesn't have that comparable credit on there. So always focus on the credit score. So or the credit report, I mean. And so
Oh,
yeah, yeah.
okay.
So
So when you say
yeah,
the credit report,
or
so it's
yeah,
basically what you have
hmm
on it that matters.
exactly.
Okay. Well, can you tell people a little bit that don't even understand anything about credit?
Yeah.
There is such thing as the bureaus. What are the bureaus that
Uh,
even report on your credit? That's the first thing. Second thing, as I said, if I have zero, like I don't even have a
yeah.
profile. Is it that I
Yeah.
have to find somebody who's willing, to put me on their profile? Like, how do I even
Mhm.
start having a profile first before I can even build up to that, seven whatever, and then build my report the way it should be? Like, what are the bureaus, and then how do you get that process going for somebody who's
Yeah.
absolutely new?
Absolutely. So you have like, of course, your credit report, which is basically a report card, right? So every single account is going to be considered a financial history with that account relationship almost. And so the
Mhm.
three main credit bureaus you have are going to be Experian, Equifax, and TransUnion. Now, Experian is going to be, of course, the end all be all. Basically, they're honestly one of the biggest credit bureaus, right? And so all of these three different credit bureaus, they are going to go ahead and actually report different information on there. So what happens, right, is that these lenders will actually pay the credit bureaus in order to be able to report this information. And so basically all they do is store data. It's almost like a data storehouse company with the credit bureaus. And they basically, whenever you want to apply for a mortgage, whenever you want to apply for a house, what the lender will do that you're applying with, they'll go ahead and pull one of the three credit bureaus that you currently have. And so they're almost like pulling your financial report card. And so they want to see exactly how you've been able to manage your debts and how you also been able to manage your relationships, right? And so that's why
Mhm.
it's super important to look at your credit report. Now, if you came here, Mama Dude told me that, hey, I have zero credit report, right? Let's say that I
Mhm.
want to be able to go ahead and get a car, or I want to be able to go and get my first investment property. Now, the
Mhm.
first thing I would do, and you have nothing on your credit report, absolutely nothing. So the first thing I would do is see if you can be able to go ahead and ask a family member that has a credit card to put you on as an authorized user. That's the easiest way that you can be able to go ahead and start to build credit. A lot of times, even like with my little cousin, he just turned 18, right? So we did is like first we went ahead and put him on one of my credit cards, so he automatically gets my actual age, and so that's called an
Mm.
authorized user. And so authorized users are major because instead of basically what we call it is piggyback, right? He's going to piggyback off of my good credit. And so it's going to transfer over to his credit report. And so the piggybacking is just allowed him to be able to get his foot in the door. And so that way he gets an extra score.
Mm.
Now,
That's also
after,
leverage.
yeah, yes, sir.
Okay.
Yes, sir. And anybody
That's
can do this, right?
Yeah, absolutely, absolutely. Like that, that's
Mhm.
crazy because yeah, you're right. Most of us, I mean, we already have family members that probably already have it, or maybe like friends that can just add you. Like if somebody adds you on it, do
Mhm.
you receive the person that is being added on the profile, like your little brother, like the example you just gave? Because a lot of people might be afraid.
Mhm.
Like one of my students recently, I was telling her, "Hey, go have your dad do that," and she was like,
Mhm.
"Oh, my dad would not do that because he doesn't want me to get the card and then I will go spend it on clothes." So if
Yeah.
somebody's there and they're afraid to do this for their kids, they don't know like doing this for their kids is actually setting up their kids for success. Because you're not going to learn this in school, guys. This information about credit, your kids are not learning this in school. You're not learning this in school. So with that, does the person that is being added on the profile receive any cards at all? Like for you right now, are you protected if you add your brother so that he doesn't go splurge and Louis Vuittons and what does
Yeah.
that look like?
No, absolutely. That's a great point. And so as soon as he's getting added on there, what I tell anybody as far as if you're asking your dad or your relative, just ask him, hey, simply you can go ahead and get the card, you can cut it up. All I want is the history, right? And so the
Mm,
history, if you know what to do with it, is way more important than the card. Because the card, you're basically you're still a lot like you're the card, the person who puts you on the credit report is actually still
mhm,
liable for that, whether you spend or splurge, that's to your point. But what I really
mm.
recommend, right, is that one thing is too with authorized users, be careful is because you can get their good credit, but you can also get their bad credit. So be careful who you ask for. So you want to make sure that they're paying their bills on time and they have a good credit report too. So before you get added on
Okay,
there.
okay, and that leads me to something else,
Yeah.
to fear. Because I feel
Yeah.
like a lot of people actually, because they fear, they don't know either one, they have no idea. I mean, most people don't know how to invest money anyway. Even if they were to get it right now, they don't know how to put it to work and double
Hmm.
it or whatever the case may be. But when it comes to the fear of, the debt, right, of going and applying for funding, would
Hmm.
you say that comes mainly for people maybe not trusting themselves, being disciplined enough to use the money for what it meant to be? Because if you like, let's say you walk into Chase right now and you get 50K, what is
Hmm.
normally that 50K meant to be used for? Like recently, I've spoke to so many of my students. They use it to go to trips to Africa. They use it for some of them like just some dumb ish, right?
Yeah.
So have you seen that a lot in terms of like or what do you think about that? I think people fear it because of the lack of
Mhm.
discipline. What do you
No.
think about that?
Yeah, no, absolutely. I mean, honestly, like if you've never been good with money, of course you're gonna fear handling
Mm,
money, right? I think it's just more of a mindset shift. Because at the end of the day, we look at the credit cards and yeah, and like some people look at it as almost free money in a sense. And so it's not necessarily free money because you always have to pay it back. And so
mm,
how I really look at credit is if you can't spend a single dollar and get $2 back, you probably should not spend that. Like if you ask any business owner if they're going ahead and spending money, is it deductible or is it like tax free? Is it like something you can write off from your taxes, or is it something that's going to make me a return on investment? So I think
mm,
like even listening to your podcast, Mama Do, is just being able to switch yourself from that consumer mindset into that producer mindset. Because at the end of the
mhm.
day, we can still take those trips. We can still get that nice car. We can still get those nice clothes. But it's the way that we do it that we have to go ahead and just be cognizant of. So, like for example, for you, right? If you're in real estate, Mama Do, instead of
Mhm,
you asking yourself, okay, if I let's say you want to get a G wagon, right? So you want to get a really
mhm,
nice car. Instead of
mhm,
you asking yourself, how much money do I need to make in order to be able to
mhm,
afford a G wagon? You're most
mhm.
likely asking yourself, how many properties can I be able to go ahead and actually
Yes.
invest in to actually get a return on investment to go ahead and afford that G wagon? So it's
Yeah.
just the switch of the mindset.
100%. That G wagon would have to be a tax write off, right?
Exactly.
Yeah, yeah. So it's definitely that's one of the things, guys. If you come around here, is like maybe just because we all have cultural biases, right? If you come from a certain background, you have things that have been shoved down your throat a lot. So if you come here, you kind of have to go through this like almost like brain rewiring type of thing, and also maybe adaptation also because you can't. I see a lot of people, at least people from West Africa, they try to
Mhm,
compare it. It's like apples and bananas. Like the US is the US. If you
mhm.
leave, Guinea or Sudan or whatever, you can't compare the two because, like you said, the US, the credit system is really powerful if you use it the right way. So that leads me into, if somebody's trying to get into real estate, right?
Mhm,
And or even let's talk about first the people that maybe already have a credit
mhm.
profile, but the credit is bad because they took the
Yeah,
wrong decisions. That they've accepted that credit card to buy clothes at the clothing store. Because here
mhm.
in the US, they're always selling you like to sign up
Yeah,
for credit cards, right? Um, like what is the worst thing to have in your credit profile that will literally like take you years to take off before you can even, um, you know, be able to access funding for whatever business you're trying to do?
absolutely. So like it's really just a tier system, right? So you have, of course, collections. Those are going to be the worst things possible that you can get. You have a chapter 7, chapter 11. So it just depends basically. I don't want to get too much in the weeds, but it
Yeah.
just basically depends on if you wrote off the whole debt or basically if you just kind of default on everything. But a bankruptcy is honestly going to be the one of the worst things. And a lot of times, whenever people have a lot of high debt, like
Mhm.
there'll be a lot of lawyers that will go ahead and tell them to go ahead and push for bankruptcy rather than
Mhm.
trying to go ahead and resolve with the creditors. But so for
Mhm.
the most part, bankruptcy is going to be the worst thing that can get off your credit report. If you have a bankruptcy, technically it's supposed to be on your credit report for 7 to 10 years. So for seven to
Mhm.
ten years, if it's on there, like as far as lenders, if they see that you've already defaulted on all of your previous debt, they're most likely not going to give you any more debt. So
Ooh.
bankruptcy is up there, right?
Oh,
And
wow.
so yeah, so the
Okay.
bankruptcy is one of the
So
worst.
bankruptcy is like, let's say you had a, I don't know, a trucking business
Hmm.
didn't work out. And
Yeah.
the reason I'm bringing up that example is a real life scenario with the seller I'm dealing with. Then it
Mhm.
didn't work out. You cannot pay back the loans that you took to buy the trucks. Then you file bankruptcy in order to kind of is it to get like payment plans, or is it just for them to not be able to seize your personal assets? Like, what does it do for the owner?
Yeah.
Obviously, guys, we're not attorneys here. Okay, we're
Yeah.
talking about credit, but so that would
Yeah.
be on your report for 5 to 7 years.
Yeah. Yep. Yep.
Okay,
7 to 10 years
that
on
is
bankruptcy.
crazy. That is
So
crazy.
basically, yeah.
Okay,
So like it wipes
how
off the debt.
how about collections? When you say collections, that is that like consistent missing payments, not paying always on time, or when you say collections, what how does a person end up with collections on their profile?
Absolutely. So collections, right? So collections aren't as heavy as bankruptcy, but they're still very, very bad in a sense, right? So usually
Mm,
what happens is that let's say you have an account, right? So if you have an account, and if you're not necessarily paying on that account and you end up defaulting, what the lender will actually do is give you 1, 2, 3, even up to 6 months. So they'll give you up to 6 months, and after 6 months, right, is usually when they charge off the account. Now the charge off is special, which is very important to understand because whenever they charge off the account, what they'll actually do is write it off of their balance books. So the lender is basically kind of giving up their hands and stating this person's not going to be able to pay, so we're going to just write it off on our balance books. And so what that
Mm.
lender actually does is going ahead and they reach out to the IRS and they get, instead of that now becoming a debt, it becomes income because now they can write it off on their books. And so once they
Mm.
write it off on their books, that's when it can turn into a collection. And so simply put, a collection is when a lender sells off the debt to a collection agency, and the collection agency will buy that actual debt for pennies on the dollar. And this is a very, very lucrative business, right?
Yeah,
Even though it's a
yeah,
very,
yeah. Very.
I
It's,
wouldn't
it's called it's
advise,
called
yeah.
note buying, guys. It's called note buying. It's a whole niche here in the U.S. All they do is trade paper because obviously these loans are all papers. As soon as you sign on that
Mhm,
paper, then you basically created the loan. Not to go down to that rabbit hole, but
mhm,
and it's tradable. Like right now, I have houses that are financed. I could literally take that paper and sell it to somebody else at 75% of the value of it, or whatever the case may be. That
mhm.
is crazy, bro. That is crazy. So, is it to be? I'm so baffled that this is not taught in school in the U.S.
Mhm.
Knowing here, for example, the system here, how you always have to go get debt to go to school, but you come out of school, you don't know nothing about credit, you don't know how to amortize a loan, or whatever the case may be. That's crazy. The other thing is this, bro.
Mhm.
How do somebody? So, okay, again, as I said, a lot of the audience here are interested in property, right? Real estate.
Yeah.
How do they go? Because I see a lot of people make the mistake of naming the LLCs weird names that when you go to the bank, one, it doesn't look good, right?
Mhm.
Two, you said something very key in the beginning. They just focus on the score, not knowing
Mhm.
that the profile oftentimes matters more than the score itself, right? So if I
Yeah.
want to go right now and I want to go do my first fix and flip maybe, or I just want to secure business funding to get a lot, do some new construction,
Mhm.
how do I, give them a play, a quick play. You don't have to go into all the details. Obviously, they have to reach out to you for that. But like, what kind of play do you do on your personal profile plus the LLC? What industries do you avoid to name it in order to be denied? Like, can you give them a play like that, or how they can get fast business funding faster, the fastest way possible?
Yeah, absolutely. So, I mean, as far as like the play, so like with the LLC, right? So at the end of the day,
Mm.
I want to like so there's high risk businesses, right? And there's businesses that are going to be low risk. Now, with high risk, that just means that the business is most likely in an industry where there's going to be a high failure rate, like trucking,
Mhm.
real estate, or just anything as far as credit repair, and even consulting. Really nowadays is considered more of a high risk in a sense, right? And so that's just something that I would definitely keep in mind. So the fact is, like, even you being in a high risk industry, it doesn't necessarily mean you won't get funded, but there's going to be a lot more loopholes to get funded, right? So now they're going to ask for a
Mhm.
lot more documentation. They're going to ask for a lot more paperwork. So you just kind of want to avoid that. So really, the business that I recommend that people starting, and at the end of the day, every business, marketing is a very low risk business, right? Every business at the end of the day, if you whatever business you're in, they do
Yeah.
marketing, they do sales. So you take that as you may, right? And
Yeah.
so with that being said, you can do marketing, you can even do another business I would do is like tech. Tech businesses that are very low risk businesses, and also business management. So those are very, very low risk. Now, if you had to ask me, what I would do, let's say you have a zero credit score, I want to be able to go and get a property within 6 months. All right, the
Mhm.
first thing I would do is, of course, first we're going to go ahead and get authorized users, right? So you want to go ahead
Mhm.
and get authorized users. And the second thing I would do is get two credit builder accounts, like as far as with credit cards, right? And so one is going to be Ava Finance, right? It's going to give you $2,500 credit limit without any type of credit check. It's not even going to check your credit at all. That's going to automatically going to get put onto your credit report. Now, the second one I would do is going to be kickoff. So you would add that's three accounts right there. So we have an authorized user, we have Ava Finance, we also have kickoff as well. So kickoff is going to give you a $3,500 credit limit. And so this is all to be able to set up your credit profile because at the end of the day, what you really want to be able to have is five trade lines, right? So you want to have at least five trade lines. When I say trade lines, I just mean report accounts that are reporting. And so to fill out those next two, what I would do honestly is go ahead and get credit strong. So I'd add two credit builder accounts for us, credit strong and self lender. And so this is the most important thing because what you really want to do is let those accounts age for 6 months. Because with anybody, if anybody knows about credit payment history, without a doubt, it's going to be the most important factor of your credit report because it's going to be 35% of your score. And we can break it down a little bit more here in a little bit. And so,
Mhm.
yeah, it's going to be 35% of your score. And so after 6 months, you can be able to easily get you access to $100,000 if you're patient. So if you properly build it up, it's always going to be better than trying to rush it. So,
100%, 100%. By the way, you know what? One word I should have used is the simplest way possible because there is no such
yeah.
thing as too fast and too easy. I mean,
Mhm.
all the guys don't fall for the quick rich get scheme type of stuff. I see a lot of gurus online talk about certain tips and tricks. There is none. The bank is your best friend. They want to fund. At the end of the day, they only make money when they give you these loans anyway, right? They want to give out these loans. So when it comes down now to when somebody, so let's say hypothetically now somebody came to you, you got them ready, they get this
Yeah.
funding. I see a lot of people also that get confused. Okay, now okay, I'm gonna go invest it. Obviously, I have to pay back at some point. Are
Mhm.
these oftentimes 0% for X amount of time, and
Mhm.
then so people have the time to put it to work and then pay back? And then is there a way you advise people to actually allocate it? I see a lot of people just take it, just dump it into, like you said, like trucking, and then they all
Mhm.
get lost because they don't succeed, the business don't succeed. It's not because you get the funding that is guaranteed you're gonna make money in your business. You have to obviously have business acumen, right? So how do you advise people to approach when you get this funding? How do you avoid doing dumb shit? And then on average, how many I guess months? Is it 0%? Is it 0%?
Yeah.
Most of it?
Yeah.
Okay.
Correct.
So it's 0% for how many months on average?
Absolutely. So you have a lot of cards, right, that are 0% for 12 months. So most of the cards are going to be like if you go to Chase, if you go to a lot of different Wells Fargo, even
Mhm.
they have 0% for 12 months. Now there are options out there such as US Bank that does have a 0% for 18 months. And so that way you can be able to go ahead and actually have 18 months with 0%. Now, just like you said, right, like as far as the funding, just because you get funding doesn't necessarily mean you guarantee that you're not going to mess up the money or your business is going to go well, right? And so to eliminate any fear, to eliminate you just wasting the money, because think about it, we always waste the money whenever we don't know where it's going to go. When we don't know where it's going to go, or we're just kind of
Yeah.
spending and splurging without a plan, that's where that
Mhm.
money really dries up and you just kind of spend it. You look back and it's like, whoa, I just spent $10,000 on things that I don't even recall, right?
Yeah.
And
Yeah. Yeah.
so the most important thing I would say is to just research, right? Whether it's getting a mentor, whether it's getting somebody like Mamadou, and just being able to reach out to them or just even do your research on yourself. And that way you can be able to know exactly what you're doing because it's honestly costing you too much not to know what you're doing compared to if you just go ahead and just try. Because business
Mhm.
is definitely a game of inches, and so it's always best to be prepared. So that's highly
Absolutely.
recommend.
Guys, the same way that you wouldn't wake up in the morning, you've never driven a car, just jump in the car and just drive off. You're gonna kill somebody, right? You're
Mhm.
absolutely going to take the test. You're going to hire somebody to teach you how to drive. It's the same thing in business. So first, you get your plan, decide what industry you want to be in. Then second thing is you either find a mentor or maybe the person. If you go to somebody like Abu, he has a bunch of friends, including me. I'm a
Mhm.
friend of his. We're in real estate. So he knows people that invest already in real estate that can actually help you come up with a plan so that when you get the funding right away, you send it because that's what you're supposed to use it for. So number one, don't let your credit. For me, my takeaways here is don't let your credit slip if you have any good ones. There is, I know in the multifamily space, guys, people Abu sponsoring big deals just because they have great credit. They have a 9 to 5 and they're getting equity in these deals and they're doing nothing. They don't have to look for the property. They don't have to manage nothing, literally. So that's the power of credit. That's number one.
Mhm.
Number two, obviously, reach out to somebody like Abu so you don't have to figure it out, right? It would help you get your
Mhm.
profile right, and then help you probably advise you on how to set up the LLC correctly, and then he would probably even tell you how to talk to these banks. When you because it's like an interview, right? When somebody will
Mhm.
apply, exactly. So you
Yeah.
need to know the right things to say, right industries. Don't try to figure it out. And then after that, obviously, somebody like Abu can connect you to the right people to help you put those funds into actual investment and make money out of it. That's the whole point. And then pay back the bank. Now you have even Abu, when you pay this off, does it give you
Mhm.
now more power to borrow even more the next round?
Exactly. Yep. And so the banks, just like Mamadou said, you want to look at the banks as a business partner, right? And so whenever, like the banks, they want to lend you money. They want to make money
Mm,
themselves, right? So
mm, mm.
when they see somebody who's a savvy investor and they actually take their money, know exactly what they're doing with it, and now they're paying them back, right? Then they're automatically going to give you more and more debt and also more and more leverage. So as far as being able to pay it back, that's why I always say it's best to have good relationships with the bank because you want to treat it like chess because there is going to be another time where you do need money. And so it's
Mm.
always best to go ahead and just stick with the good relationship. So they'll always be able to be there. So
Absolutely, guys. I mean, it's the same thing, Abu. If I was your little brother and I came to you, I say, "Hey, give me 50," and then I come to you a year later and I haven't made any a penny out of it, would you ever give me money again? It just makes
mhm,
sense. Is the same absolute thing, way, right?
sure.
So, Abu, one last question: if somebody's sitting there
Yeah.
saying, "You know what? Why then would I go through somebody to do that if I could just try to figure it out myself?" Right? What would you tell that person? Because I've seen people try this and they completely fail just because they're trying to save pennies, by the way. Like what would you tell that person?
Yeah, I mean, you can
To,
always make money. Yeah, I honestly would tell that person you can always make the money back. It's just the time
Mhm,
aspect of it, right?
mm,
You can't always get that time back. And I highly
yeah,
recommend that if you are gonna hire somebody, just to go ahead and actually be able to like understand exactly what they're doing. Because
mhm.
basically what it's almost like taking a toll road, right? So it's either you're gonna get there a lot faster with the toll road and just pay a little bit more, or you're gonna go ahead and just kind of jig and jag and cost and get it costly mistakes, right? So and
Yeah,
mistakes are always going to cost you more. So you're either going to pay with
yeah.
time or you're going to pay with money. So choice is yours,
Yeah,
right?
there's something that is called is it pay to play? But also, to me,
Yeah,
the most important thing, Abu, is the relationship. Because
exactly.
when we went to fund our LLCs, the RMs, so somebody like Abu will like introduce you to the people that he's working through. He has relationships. If you already funded people, you have relationships. So going
Mhm.
through him, you get access to that network. So sometimes it's not just about, and then the next round, now you know exactly the way shit is done. So it's gonna cost you what you call it. Sometimes don't ask yourself how much it costs. Just ask yourself how much it's costing you to not pay for it. Basically. All right, guys.
Right.
Abu, how do they find you?
Yeah, so you can guys can find me on YouTube. You can find me on Instagram, Real CEO Blue. So I'm active on all social media. So definitely go ahead and follow me and chat and book a call with me and my team as well.
Absolutely, guys. He's in the Houston. He's in Houston physically, but I'm assuming you help people
Sure.
nationwide. Doesn't matter where they
Yeah,
are.
all
Okay.
50 states. Mhm.
Absolutely, guys. So if you need, good your credit profile being set up properly, helping you get funding so you can invest, guys, reach out to Abu. I'll have all his links below anyway, and I'm definitely gonna have him for a second episode because I wanted to do a longer one, but today we don't have time. So I'll have him for a second episode. That one will be in person. I'll be in Houston with him, so I'll even
Sure.
have more fire questions. Next time we'll probably go a little bit over. But Abu, bro, I really appreciate you coming up here.
Mhm.
Guaranteed they've learned some, so make sure you take notes, and I'll have him back for sure in person. All right. Thank you so
Sure.
much, Abu. Guys, this was the Boom Effect podcast. As you guys know, we'll see you guys on the next episode. Until next time, make sure you keep that boom mentality, stay bold, stay obsessed, stay optimistic, and lastly, keep that mindset abundance. There is enough for everybody, guys. All right. So lock in. I'll see you on the next one. Boom, boom, boom.